A very good morning, guys. Yesterday, the Sensex closed at 78,954, 373 points higher. The settlement that half the desk was braced to see break held. But if you're watching your screen in the last 10 minutes of the day, you saw something the tape never actually printed. The Sensex went from 78,700 all the way till 79,400 almost, and then came back 400 points lower in the last minute to close at 78,954. This is the Tanmay Edge. You are listening to episode 98. I am Tanmay Gurdagoti. Let's go. So let me set the scene, guys. Because on the surface, nothing happened. Nifty closed at 24,636, up 11 points. The high was 24,677, the low was 24,604, a 73-point range, the tightest day of the week. 15 stocks up, 35 stocks down. The volatility gauge or the fear index at 12. If you read the headline numbers, you would think the market fell asleep. Actually, it did not. It had coiled up. Underneath that flat Nifty, the Sensex was actually up almost half a percent, and split tells you why the index looked dead. Reliance was up 3.4%, State Bank was up 3%, Bharat Electronics up 2.5%, ICICI Bank up 2.3%. That is the heavyweight banks and the Reliance doing the lifting. But the drag came from the other side. TCS down 2%, Infi down, the whole IT pack was soft. Autos was down 1%, metals down 1%. The Nifty is a weighted average, and yesterday the winners and the losers were almost exactly the same size, so the index went nowhere while a lot of move underneath it happened. In fact, small cap index was up 1%. On the same day the Nifty was flat. The tape was firmer than the headline. Now the part I want you to really hear. Yesterday was the first Sensex weekly expiry run through the new CAS auction. For 2 days earlier this week, that auction had misfired and left phantom prints. Everybody was watching to see if the settlement would break again. And here is the thing, it did not. But the moment was crazy. The final Sensex settlement was clean. The futures basis barely moved a point of the fair value. No phantom gap. But the volatility did not disappear. It just moved. It moved into the auction window itself. In those last few minutes, the indicative price, the provisional number, the exchange shows you while it is matching all the closing orders, jumped extremely high. It ran well above the where the stock was actually trading, and then it settled down to print an orderly close. So the fear that the volatility would be untested into expiry was right. It just paid inside the auction, not into the settlement. And that is your lesson for the day. Because most of the people do not know this, the indicative price during the closing auction is not the close, it is a work in progress. While the auction is uncrossing, that number can swing violently on thin, lumpy order flow. One basket order can throw it hundreds of points, and then it snaps back when the final match prints. On these first few Sensex auctions under the new system, that window is exactly where the wildness is landing. So, two new rules, guys. Do not trade the indicative print, it is a moving target, and do not fire in a market on the close into the auction. The market has not learned to trust yet because the price you are chasing is not real until the bell rings. So, okay, let's go under the hood because the positioning is proper standoff, and this is a good part. I always read the proprietary traders first, then the FIs, and then the clients. The pros are leaning bullish. On the index options, they are sitting long about 1.91 calls and lack and short about 40,000 puts. Long calls plus short puts, that is an offensive book. They want up, or at least they are getting paid to be against down. The foreign institutions are doing the exact opposite. They are long roughly 3.88 lakh puts and the short about 1.63 lakh calls. Long puts plus short calls, that is a defensive book. That is a hedge, and on futures they are carrying about 1.4 lakh 4-5 lakh short index contracts. Now, do not misread that as a crash call because on the stock futures side, the same FIs are long 6.4 lakh stock futures contract. That is 4 is to 1 hedged long. They are owning the market and they are buying the insurance on the index. They are not betting against it. And the crowd, the client is short almost 4 lakh puts naked, selling downside protection to everyone else. At a 12 weeks, they are being paid almost nothing to take that risk. So you have the pros offensive, the FIs defensive, and the crowd short volatility. Nobody is actually doing that great. And that is a coil, not a trend. Who actually held the tape up yesterday? But the domestic funds, FIs, the cash market were flat, minus 18 crore, basically nothing. The DIs bought over 4,000 crore. The locals absorbed the whole day. Now the chain into Tuesday's Nifty weekly expiry, and I pulled a straight off the settlement data. The 24,600 strike still remains the magnet, and the max pain is 24,600. It has the biggest stack of options for the week, and yesterday put writers piled it there and just above it, adding about roughly 35 lakh puts at 24,600 and 28 lakh puts at 24,700. That is the smart money selling puts, which means they are willing to buy there, which means it is a real support. At the same time, call writers below 24,700 bought their calls back and pulled the resistance higher. So the lid has lifted from 24,600 to 24,700, 800, indicating that we could hit to 24,800 today. Support building up, resistance moving up. That is a quite constructive picture. The straddle for Tuesday is 252 points. Gamma flips from just about 24,650, 700 levels, and we closed at 24,636. So moves are slightly amplified until we reclaim 24,650 to 700. But 12 weeks skips a lid on how far we go. Quick lap around the world, guys. Gift Nifty is trading near 24,646, basically flat, pointing to a quite open. The US closed a touch lower. Europe was mixed. Asia is red this morning. Nikkei down over a percent. Korea is down 1.3%. Brent is at $83. Gold is sitting near a record at 42.58. The rupee is at 95.20. Nothing screaming. And our own book, the rupee case all cap portfolio, is up 1.67% since its last rebalance versus 1% for its benchmark. So a little alpha, even if the tape is flat. That is the whole point of a system. It keeps working when the index does nothing. One quick word on yesterday's call, guys. Episode 97 said the wall would be bid into the untested Sensex auction, not crushed. It paid just inside the auction window. I'll take a 4 on 5 on that as well. So the full scorecard is available on rupeecase.com. So here is the map and the plan for today. 24,600 is your support and the magnet. 24,700 is currently the first resistance. Breaking that, we would see 25,200 soon, but the first target is 24,800. If the coil breaks up below 24,600, watch for that 24,500 getting broken, and we could see 24,450 to 400 levels as well. We pin into Tuesday, trade the range, respect the auction, and do not chase the last print. Have a great weekend, guys. One flat index, one auction that moved the price without a single real trade, one coil into Tuesday. Buy the range, watch 24,700 on close. This was the match. If you found value in this, guys, please share it with a one trader friend who needs it right now. Subscribe on Apple Podcast, Spotify, and Amazon Music, and listen it live on rupeegauge.com where it streams first. And give it a rating and a review, guys, if you want to add something to the podcast. See you all once again on Monday morning.